Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking energy, let's talk crude oil. Crude oil up 3.4% today. Another big day for WTI crude, getting above $70 for the first time since May 25th, being driven by several factors, mostly applying to supply disruption. The Libyan civil war has caused vital oil facilities in Libya to fall into the hands of rebels that are backed by a group that is anti-UN and anti-trade. So they have kind of cut off the supply of 240,000 barrels a day of Libyan crude oil. So that, combined with the OPEC production cuts that haven't been eased as much as the market thought, has put this upward pressure on crude oil over the last few days. The Libyan civil war is actually the biggest single supply event that has hit the market directly. And then today, Iranian oil came into focus. The U.S. signaled that they would have a zero tolerance policy for any countries. And if you think about it, that would include China and North Korea. It's certainly not going to be a very positive thing for the overall global trade war, but a zero tolerance policy starting November 4th for any country that wants to import Iranian crude oil into their energy system. So that was a big announcement by the U.S. government. It caused part of the spike that we saw. We started the day really virtually unchanged on crude oil. That announcement came out and it really drove everything up. The Libyan civil war actually affected prices a day or two ago. This is piling on to that. In that situation, I don't think most people thought that the U.S. would take such an aggressive stance. So they're talking about sanctions against countries that actually bring Iranian oil in once the sanctions take effect. Zero tolerance, no exemptions was the announcement from the U.S., also driving prices. So it looks like that Iranian oil, which is upwards of 2 million barrels a day, could be completely cut off from the market if the U.S. is able to hold that stand. And then lastly, the Canadian supply is not looking like it's going to come back online anytime soon. The outage in Alberta, which affects heavy crude oil, continues to push prices higher on the WTI side. That spread between Canadian sands and WTI is a real thing, but when you cut off the supply, the transports become less of an issue because there's less pipeline tightness. There's more room in the supply chain. So the supply becomes less expensive, or rather the transport of that supply, and that puts more demand on the Canadian crude, pushing up the price of WTI. So everything is about supply in the current crude oil market, not about demand. Demand continues to grow. Tomorrow we'll get EIA figures and we'll see. Last week we had the EIA refinery utilization up above 96%. That's almost unsustainable to be at that level. So if that continues to rise or comes off a little bit, give us a little bit of a cue into demand. But right now we're talking all about supply. WTI crude back above $70 today with a 3.4% move to the upside. This is Bob Iaccino talking crude oil from the CME Group trading floor in Chicago.